So what I'm seeing is I'm seeing weakness here. And when I say weakness, those that have been with Axia for a while are going to know exactly what I mean with detail. Those of you that are newer are going to wonder, well, what does he mean by weakness? So to answer that question, I just want you to think of it from a visual perspective. So if you look at this auction up here, relative to this singular print that traded above that auction, you are able to visually identify that there's clearly more value here than there was on the single print. So when I say weak, that's just what I mean, is an area that didn't trade with a lot of value, and that's what we're seeing here. What's even more nuanced, and this, for those that are new, you might not know what I mean here, but for those that are very seasoned, you know that this is lacking a buying tail, and that it is a lack of buying tail that is defended by essentially a tiny little auction here that did trade a decent amount of value, but that value is still exposed by the current retest of that area. And if that area breaks, this is where the so-called intervention took place. Therefore, it wouldn't be anomalous to see that area get retested, filled out, and then have its way. So that's what I mean by using market profile to identify an edge, because even if I look at pound or euro, I can identify different edges there, but the fruitfulness, I don't know if that's really a way to describe it, but the opportunity in the yen is much clearer from a profile perspective. And because we're in a tactician's market, because we are very much in a low vol market, you can see that I'm not leaning into a macro related blip for access. I'm leaning more in the structures. I'm leaning more on the structures that then later the macro catalysts, whether it's a scheduled data point or an unscheduled data point, will then provide me the access, which I've already identified based on the structure. So I will discuss the equity market, but not all. I will just discuss the NAS because obviously we have NVIDIA. Well, you know what? Let's just do S&P because it's obviously the most kind of commonly referred to, and it is going to be equally affected by NVIDIA anyway, with NASDAQ just being a little bit more erratic. So I think when it comes to the S&P, if you're just, getting started in trading, and this is the world that you've started your trading in, it's very interesting. And you'll look, if you look back on your career and you'll think, wow, I started trading when the S&P was trading all-time highs. So what I would say is make sure that you address your career and your, even if you're a junior who's been with us a little while, the fact is, all-time highs as a day trader, that's an experience that you want to take into the rest of your trading career, no matter where we go, because it is a specific type of behavior that requires a specific type of strategy and tactic. And in this particular optic, what I can tell you is that when we did this single print down into this area here, and the market essentially has held that level, that is what you call momentum buying. It's like we take the momentum from here and you add that momentum to here. And if you get even more momentum, that would very much be pattern correlated to, or a pattern recall of the behavior that we saw in June of 2021, just prior to Ukraine's invasion, or excuse me, prior to the invasion of Ukraine. So all signs point to relentless, slow, and aggressive bidding on the equity market.